it depends what time horizon, right? Let's not worry about what happens in the first, week, 2 weeks, 3 weeks. But over time, I think of this as two different ways. Those of us who've been in this space for a long time, it's like our IPO. We were seed investors in Bitcoin or Series A investors, Series B, Series C, and then eventually we get the IPO. So, but like the IPOs of the 90s, I think it usually does, they do pretty well, which is we'll see a lot of follow through. So I'm expecting, the same as everybody else, the kind of $50 billion over the course of the year. But there is no insanity like crypto insanity. As you know, Ran, is when things start happening, people they lose their minds with FOMO and everything else.
Hi there, lovers of cryptocurrency. With none other than Raoul Pal to lead the way, we set off on an adventure into the complex realm of cryptocurrencies today. The industry has been rocked by the recent approval of various spot Bitcoin ETFs, which has sparked both optimism and concern. While the cryptocurrency community celebrates record-breaking events and high transaction volumes, concerns are raised over the true effect on the market. Last Thursday, the excitement reached a fever pitch as Bloomberg analysts Eric Balchunas and James Cart reported billions of dollars in transactions, portraying the newly approved ETFs as an unparalleled success. These claims, however, are surrounded with uncertainty, particularly in view of the ongoing drop in Bitcoin values after the ETF's introduction. Though it temporarily reached a 2-year high of $49,000 per coin, Bitcoin has seen a substantial decline and is now trading at $43,344. Examining the data more closely, sales and outflows accounted for around half of the $2.3 billion in GBTC figures that were published. Whose fault? Higher fees, and the locking up of old Bitcoin. Consequently, the real numbers of new inflows were strikingly close to zero. This raises crucial questions about the actual impact and success of these recently approved ETFs. Co-founder of Real Vision and well-known macro expert Raoul Pal offered his own perspective on these advancements and their possible effects on Bitcoin and the cryptocurrency market in a recent interview. Raoul highlights the value of endurance and tolerance in the face of price drops, much like other well-known personalities in the cryptocurrency world. Still, that's not all. We'll look at Raoul Pal's opinions on Ethereum and other cryptocurrencies, in addition to his thoughts on Bitcoin in this video. We'll have an extensive understanding of the US economy as a whole, as well as how these trends may affect digital assets in the future as we go through his thoughts. Listen to what he has to say.
So there is no real precedent for a 70-volt asset that's in a roaring bull market coming to be available to every single person who owns a brokerage in the United States. So anything could happen. It could be a wild-ass bubble. I don't think it's going to be a damp squid. Look, they're all correlated anyway. They always were. They were correlated by the macro business cycle, and they always have been. So they are correlated assets, but the rebellious aspect of building a new financial system, you can either take it as, well, Gary's won and we've kind of put it inside Wall Street's walls, or we put the Trojan horse inside of Wall Street. I'll go with the latter.
Do you think that now the institutions are going, okay, we've got the Bitcoin ETF, and it's time to move on to the next one, which is logically going to get an ETF, and that's going to be ETH?
It's not the institutions, it's us lot. We're the people front running it. So we're going, okay, ETH next, let's pile our money into ETH. And that's what's going on, and that will go. I mean, I think last time I came on the show, I said this is the next big trade, amongst the majors, is this switch. And if I look at the chart pattern, it's this giant wedge over a period of time. In fact, we showed it on the show last time, this giant wedge pattern in the ETH Bitcoin cross on the monthly chart. Then, I use a lot of DMARC for my technical analysis. It gave daily, weekly, and very soon a monthly 9 count.
What do you think the probability is of an ETH ETF in the next 12 months?
Even the guys from Bloomberg who've been on top of all of this have said, listen, it's probably a 60-70% chance that will happen. Makes sense to me. Again, if you've got the two biggest assets, just think of Gary's mind, right? Gary Gensler. His mind is, let's get these behind Wall Street. Let's give Wall Street share of this. Let's get it into my jurisdiction. Then, of course, you want the second largest asset. The rest he'll probably leave to us for a while until we get a change of SEC or whatever. But he wants to make sure that they've kind of got the guardrails around the two big ones. So I think they want it.
As we come to the end of Raoul Pal's journey of the cryptocurrency world, Ethereum has shown to be a very successful platform. While Bitcoin has dropped 12%, Ethereum has increased by the same amount and is now trading at $2,534, up 11.55% over the last week. The anticipation of an Ethereum ETF's approval, which might happen by year's end, is fueling the cryptocurrency's rise. Even while SEC Chair Gary Gensler is adamantly opposed to any spot crypto ETF, supporters believe that legal pressures such to the grayscale ruling might potentially influence the outcome. In the grayscale decision, which was crucial for the acceptance of Bitcoin ETFs, the court stressed how inconsistent it is to reject spot ETFs when futures ETFs are already accessible. The acceptance of Ethereum ETFs on the spot might be influenced by this legal precedent. Particularly, the suspicion is heightened by BlackRock CEO Larry Fink's interest in Ethereum ETFs. The ongoing speculation raises questions about whether Gensler will yield to external pressures. Share your thoughts in the comments below. Now let's get back to Raoul Pal's interview.
So this is global liquidity from all the major central banks, the Fed, the BOJ, the PBOC, the ECB, and the Bank of England. And basically, they were all withdrawing liquidity, but I noticed that liquidity had bottomed in year-on-year measures and other forms back in... It actually started bottoming in June, which got me into starting to rebuy Ethereum in the lows there, and then fully confirmed the bottom to me in my measures in October, November. So that's when I really kind of loaded up in technology and the full crypto. And for me, that these are forecastable, readable cycles based around the debt refi cycle. So for me, that's why I've got a more extended view before a downturn than Henrik has, because I don't see any reason why it won't just continue, generally speaking, till 2025, the end of this perfect cycles we've been having since 2008. So this is the Fed balance sheet in black, and the red is 36 months forward of the current interest payments. What that's telling you is the interest payments are set to explode or are exploding because of the COVID payments 36 months ago, the COVID debt. And what we found, this is the shorter term chart, using the longer term chart since they started QE, basically all QE has been monetizing past debt. So after the 4-year cycle, they just monetize the debt, shove it on the balance sheet, start again. So it's been this endless 4-year cycle based around this. And we've got this ridiculous phase to come where they can't really manage the interest payments without doing something. But you can't have rates at 5% or even 4% if you're looking at slightly longer, because the maths don't work, and they've got to keep issuing to pay all the interest of the 10 trillion or whatever they have to roll over the next year or two. So, for me, that's the liquidity cycle. And you do that and assets go up because you're optically debasing the denominator, the currency. That's been my core thesis for this everything code cycle, is they've done the same thing every time, which is, okay, the economy slows down because rates have gone up and there's so much debt. So fine, the economy slows down a bit. And they use it. It's the same time as the election cycle as well. It's all the same cycle. Bitcoin halving cycle, it's all the same time. They get interest rates down and they engineer some way of using the balance sheet. Who the hell knows how, what reason? But that's generally what they do. And that's why election years tend to be pretty good years, which is why, this is why, and I'd love to hear your view, Henrik. That's why I still struggle to get bearish for 2025, because even if the economy slows, in an election year, they'll just stimulate more. And that's the struggle I have, is that, if you have a blow off top and some, I've seen some of your stuff, like you could have a 1929 style thing. I'm like, I don't think you can, because they just print money and optically it debases the currency. So how do you get that?
Raoul Pal discusses his investment approach, which is centered on changes in global liquidity. He points out that major central banks have been withdrawing cash, but he also points out that year-over-year metrics have bottomed out. He has been tracking this pattern since June. Raoul's decision to invest in Ethereum during its lows was impacted by this liquidity bottoming, which confirmed the market bottom in October and November. His strategy is based on legible and forecastable cycles, particularly those related to the debt refinancing cycle. Raoul notes the cyclical pattern of market fluctuations since 2008 to maintain his optimistic outlook for the market until 2025. He emphasizes an impending spike in interest payments because of COVID-related debt by utilizing utilizing the Fed balance sheet to demonstrate his thesis. The idea of visually debasing the currency denominator throughout liquidity cycles, which he views as a major driver driving asset appreciation, is central to his method. Pal is aware of the difficulties that lie ahead, especially in handling debt payments without sharply hiking interest rates. Raoul is cautious despite possible economic slowdowns, pointing to central banks' historical tendency to stimulate during election years. This element, together with his central claim about currency debasement, makes him reluctant to take an optimistic outlook of 2025. Until next time, happy investing.